Hey everyone, it's Blair here at Time Trades. Thanks for joining me this weekend. Very newsworthy week in the past week. So we'll start as usual with a review of last week's forecast and how that performed, and then update our forecast for the coming days and weeks. Okay, so I'm going to give myself a D for last week's forecast. Obviously did not anticipate the pump or the decoupling that we saw between the NASDAQ tech stocks and the SPX. I've never seen a decoupling this big between the two. Normally, I can build a forecast on the NASDAQ and be fairly confident that it's going to apply to both NASDAQ and the S&P, but in this case, we saw a huge decoupling between the two as money from the bank actions that were taken by the Fed flowed into big tech, and of course, money left the banking sector, and especially the regional banks, with the failures over the weekend. So here we are, another weekend, another bank failure. Credit Suisse, it looks like, is going to be getting bought by UBS. We don't know what effect that is going to have on Monday. Probably not positive. I guess I'm expecting markets to open lower Monday and continue down a little bit Tuesday, and I'll explain why shortly. So it really feels to me like this past week was a bit of a point of recognition where everyone, all the market participants, kind of understand the nature of the jam that the Fed is in and the limited options that are available to the Fed. And the most likely option to, prevent a complete implosion from the credit-based economy is really just to trash the dollar. So that explains a lot of why you saw gold go up. That explains why you saw Bitcoin go up. I really think that those will end up being the macro trades of the year, metals and Bitcoin, as this trend in the US dollar evolves over the coming year. So it feels to me like this past week was really a recognition of that. But that being said, these things don't happen overnight, right? Like, as an example, if you go back and take a look at natural gas, let's take a look at what happened in natural gas right after the Russian invasion of Ukraine and the start of that war. Now that had pretty immediate and obvious impact to the natural gas market, but that wasn't reflected in the price of gas for another month. Here we are, November 24th, 2022, and the day of the invasion, gas went down for the rest of the week there. And of course, this is North American natural gas. I guess prices would have been a little different in the European market, but my point here is that it takes time for these macro events, these big inflection points, to reflect in asset prices. So it took about a month before North American natural gas started going up, and the events in Europe started being reflected there. And I think that's kind of what you'll see here. What we saw last week was sort of the shock event as the banks started failing, and it became evident that the Fed would have to increase its balance sheet in order to bail them out and prevent more bank runs. And it's going to take some time for that shock event to get digested and be reflected in the system going forward. Okay, so let's go back to our forecast. So we're going to go over here to the video tab, and I give myself a D for this for a couple reasons. I didn't anticipate the Fed reacting so quickly, and frankly I should have. It was obvious, once banks started failing. The only thing that these government agencies are good at is kind of throwing taxpayer money back in the system. So of course they did the only thing they could do. which is throw money into the system. And we saw that reflected in asset prices here. So what does this mean going forward? Well, let's take a look at what's coming up this week. Okay, the big event is the FOMC on Wednesday, and normally for FOMC meetings, the pattern is that participants get heavily hedged. And then once the announcement is made and the FOMC 90% of the time does the expected thing, then all those hedges get unwound, and then that's a bullish event as the puts get sold, and then we typically see prices go up in the afternoon of the FOMC announcement. So that's what I'm expecting on Wednesday after the FOMC announcement. Between now and Wednesday, though, I think we do go down just because of the additional banking news that has to be digested. And also, if we drill down into the details of the lower timeframes and take a look at some of the lower timeframes here of what happened on Friday, this was not a very bullish continuation day, right? So let's go over to the Qs. Here's the Qs. Now I'm gonna, I know there's a lot of lines on the screen, but let me just walk you through one of my favorite new indicators here. This is an indicator called Divergence for Many Indicators version 4 on TradingView. And that is what is displaying these labels here, okay? So I would highly recommend this. What I found is this can really clean up and simplify your charts. It's replaced a number of different indicators, and all it does is it shows divergences across multiple of these indicators. So that is what is producing these yellow and blue labels here, okay? So can't recommend that enough. I'm going to drop a link in the description below for you to find that and add it to your charts. So what are we looking at here? Well, we're looking at a divergence on Friday in the MACD on the QQQ daily. And if you go and take a look at the track record of these divergences, it's pretty good. You can see how there was an on-balance volume divergence on February 3rd. There was a histogram and a stochastic and a money flow indicator divergence on March 13th. There was a CMF divergence down here right near the December low. So on a daily level, we've got a negative divergence. And if we drill down to intraday 30-minute level, and if we also take a look at the Chaikin money flow indicator, which is what I've got down here, CMF stands for Chaikin money flow, one of my favorite volume indicators, we can see that this made a high of 0.62 on Friday morning. So that probably doesn't mean anything to anyone here. 0.62 is actually an extremely high reading. So let's just go back in time and take a look at the last time, a couple of times it approached 0.62. As we can keep scrolling back until the orange line appears. Here it is here on November 30th. And look at that, that was quite the high. If we keep scrolling back before that through the eclipse season, that was the purple box. Here it is here again on August 15th. Okay, so that indicates to me that we're at a short-term top, right? When we see divergences that high in the Chaikin money flow accompanied by a daily divergence of the MACD, I think we're at a short-term top here. And my expectation is that we go down into FOMC, but then that's when option flows start to take over and you see all of the hedge unwinding activity take over on FOMC day. Okay, so let's go back to our forecast. We can build a new forecast based on this information. And we also have, and I want to remind everyone of these two green lines here. These are basically my bull and bear lines in the sand. And we've been basically going sideways through this big wedge, this big triangle here as it narrows and as energy is coiling. The move coming out of here will be big and significant. I do believe that once we get through April, especially mid-April, the move will end up going up, but we've got a little bit more volatility here to navigate through the FOMC, and there's some other negative trends and astro events happening in April that lend me to believe we've got one last move down before we can move up again. So after analyzing a number of different events, this is the updated forecast that I'm working with. So I think we see weakness on some more news coming down into FOMC. I think the unwinding of the hedges on FOMC day is going to trigger an uptrend. I believe we will be moving up into the Gann wave yellow here on the 29th. That was a big part of the old forecast as well, just that part of the lunar cycle. Then I do think we will be resolving higher as we get into April, but there's one last potential for a move down here in early April. Now, one of the things I want to emphasize about this arrow is that what's important is kind of the days of the pivots, not the levels. Like the entire thing could take on a totally different shape, right? But you know, the pivots could still be the same. It could end up looking like this for all I know, right? So please just focus on the pivots and not on the levels. The pivot days are really where I invest a lot of my time and effort. So I think it's important, though, to acknowledge the overall change in liquidity flows here. And we cannot deny those. If we go and take a look at liquidity flows using our Fed balance sheet chart, we can see that huge injection of liquidity that happened last week, right? So again, this is what I'm talking about. It's a point of recognition. And we haven't seen the Fed balance sheet be this high since April of 2022, almost a year ago. So the liquidity injection here is significant, cannot be denied. This is an inflection point here, I believe. We still need some time to digest that. We've got some event volatility we need to navigate first, but I really believe that once we get through mid-April or so, we will be looking at a bull market. So let's go back and take a look at some of the time trades forecasts here. And a lot of what I just described is reflected here in the time trades forecast. We've got weakness next week in the Qs. And the machine learning model is not aware of FOMC days. I should probably add that in there. It's probably, it would probably help out a little bit. But what's really interesting is this huge cluster of pivot lows between March 28th and say April 13th here. So this indicates to me we've got a high probability of a reversal in this time zone. And if we go and take a look at a couple other data points like the short-term waves, right? So we've got short-term waves here, and I talk about these a lot. Yellow is Mercury speed. Blue is Mercury and Venus separation. And we tend to see reversals at inflection points of both of these. So we've got Mercury slowing down already, actually, and it's going to decelerate even more heading into the April retrograde season. And you can see what happens as it decelerates. It does tend to correlate with moves down. And also changes in direction of the blue line of Mercury and Venus separation also tend to correlate with reversals as well. You know, it may take a few days, up to a week or two, but the correlation is there. And that's why these are in the model. And that's why these are on the screen, because they are helpful in identifying these reversal periods. The other thing that's helpful is the juice indicator. And these are planetary alignments that tend to correlate with bullish movements. So when you see a juice spike like this up, tends to correlate with bullish moves, right? We've got March 2nd, February 15th. These are usually big green candles. And in this case, this was a red candle, but it did take out the prior day's high. If we look at November 30th, huge green candle. November 9th was red, but it was also the day before a huge gap up, right? We can see over here, the biggest Q spike on the screen was October 4th, and again, another big gap up, okay? So I mentioned this because we've got another juice spike coming up April 4th, all right? So this is something to be aware of, is the bullish potential there on April 4th. Okay, so that is some of the rationale behind this yellow arrow here. So if we go and take a look at our video tab here, you can see that Monday, April 3rd, I've got a low, and in part that's because of the juice spike that's coming on April 4th. And in part, it's also because of the pattern of pivot lows that the machine learning is generating. And we've got that big cluster of pivot lows in this time area, okay? So this is kind of the shape I'm anticipating going forward. So we will watch this very closely. Bottom line is any sort of material separation above or below these green lines, I'm going to be trading in that direction. Okay, I can always be wrong, despite everything that all the work that gets done. I'm very open to the fact that these forecasts can and will be wrong. But what's important to me is these green lines here and how they perform. You can see if we zoom back in the past. I'm just going to zoom in here because you're probably wondering, okay, well, how have they done in the past? And let's just simplify this chart a little bit. We can take off the Gann waves. And we can see here how this green line has basically contained the entire move down since September 2021, with the exception of the all-time high over here in November. Okay, so these are anchored to Mars cycles, and it's been very effective in rejecting the high on August 15th. There was a little deviation up here to the magic level in the March high. It rejected the level after a little deviation on February 1st, 2022. And here we are here, back with another attempt at separating above this green line on March 16th. Okay, so there's our forecast going forward. There's the logic behind it. Right or wrong, I'm going to be trading these green lines and going with the flow there. Okay, so that's a very long introduction. Let's go and take a look at some of our other stocks here and indexes. Let's take a quick look at SPX. Okay. So SPX is showing a pivot low for early next week, March 20th. So that's kind of in line with our expectations. Not a lot of clarity on the machine learning models after that, though. Let's take a look at NDX. So this is the NASDAQ 100 index. So this is also showing a move down early next week. We have the mass pressure index active on this one. And this is also showing a big cluster of pivot lows in late March, early April in alignment with the mass pressure index. And then after that, we see some pivot highs over here, April 24th, 25th in that area, okay? So let's take a quick look next at crypto. So we can go and take a look at Bitcoin. All right, so we've got the GAN fans on here on Bitcoin, and Bitcoin has had a great week. It's moved up to this 1 by 1 up from 0. So we've got a GAN fan over here anchored to 0. If we go over to TradingView, we can take a look at Bitcoin. And let's bring that up. And this blue line here, that is that 1 by 1 up from 0, because we're looking at a 30-minute chart here. And you can see it's starting to separate above there, which is pretty bullish. So you can see how it was rejected here on March 14th earlier this week. And then it found support at the magic level of 24,460. That's the white horizontal line here. And now it's built up enough energy to take another stab at separating above this this 1 by 1 up from 0, which is a very significant line. If we zoom back out to the daily, we can see here how back on March 2nd, Bitcoin crossed below that and immediately dropped from 24 down to 20. We got a wick down. Look at that beautiful bottoming wick around 20K, and ever since then it's been blasting up. So separating above this this 1 by 1 up from 0 is very bullish for Bitcoin. Okay, so let's take a quick look at Ethereum. Ethereum is in an even stronger position than Bitcoin, as it's already above that 1 by 1 up from 0 that was anchored to the low over here on November 9th. So here it is here, and it's also above the 2 by 1 up from there. You can see how the 2 by 1 up from 0 acted as support on March 10th at 1430, and we've had a solid push up since then, and we're now above the 1 by 1 from the November low. So very strong price action here from Ethereum. Looks like it could coast up until this low probability pivot high here around late March, but then we've got another burst of energy coming April 7th, and I look at this pivot low as something that could potentially invert. And again, I think this push up this week is sort of just a reflection of the dollar and the reality of the banking situation, and how really the only option available to the Fed is to weaken the dollar. Okay, so that's Ethereum. Let's wrap things up with a quick look at the Nifty as usual. And the Nifty had a red week, but if we go and turn on GAN fans here, it adds a lot more context, I guess, to the overall move. So let's just drag these and adjust these and get them in line a little bit. So if we adjust it so that the GAN fan from the high back on December 1 kind of contains price, now you can see it makes a lot more sense, right? We see price bouncing off the lower fan. We see price being rejected from the upper fan. And now we're down here bouncing off the 1 by 1, and we've got a cluster of green coming up. So this looks to me like in combination with these bottoming wicks we've got on the Nifty and the fact that this little cluster of moves down, we're on the backside of those. So we're going to be coming up. We've got a cluster of green coming up. We've got some pivot highs coming up. This looks like a great buying opportunity right here, right now for the Nifty 50. So we will see how that evolves over the next week or so, but it has come down to this 1 by 1 very nicely. Let's turn on the magic levels and see if we tagged a magic level at all here. And sure enough, we did. Look at that. Right at 17,000. I think this is the number I've been looking at for a few weeks now. So Nifty has come right down into that area. We've got a nice pocket here. We've got a Gann fan coming up from 0, right? This is the 1 by 2 up from 0 that started on December 20th, 2021. Who has that line on their chart? I bet no one has. So we can see here a nice bullish setup on the Nifty. We'll be tracking that as that goes forward. Okay, that's it for me. Thanks for watching this long call. Good luck trading this week. Stay safe, manage risk, and we will talk to you again next week. Bye now.